We are coming live to you. We're going to be coming live every Thursday evening to give you some information about credit so that we can help you to improve your credit score through Credit Score Pro. So today's educational platform is going to be about how to understand your credit report. And please make sure you follow and like our page so you can get more information whenever we have webinars like this about anything credit, and you can register so that you can participate in it. But if you have any questions or comments that you'd like to make, please feel free to do that, and we will get back to you as soon as possible.
Absolutely. So today we are talking about understanding credit reporting, as Ali had mentioned. So I'm going to go ahead and I'm going to bring up the PowerPoint we have put together for today. But while I get that pulled up here, Ali, why don't you talk a little bit about yourself and your background, and we'll jump into our topic afterward.
Okay, so first of all, I'd like to say that my name's Alicia Alt, but I go by Ali. So I know the screen says Alicia, so I thought I might just say that. But I am a credit expert along with Ivory. We've both been in the industry for a long time. I have spent the last 20 years in the credit and housing industry. And we bring all of our expertise into Credit Score Pro so that we can help individuals not only improve their credit, but really reach their credit goals. So there's a lot of resources out there that may help you improve your credit, but ours is very unique in that it's designed to meet you where you're at and to help you from where you're at today to having better credit, but also reaching that credit goal that you might have.
Yeah, that's a really great way to put it. So essentially, when it comes to Credit Score Pro, our vision was really to revolutionize the credit industry and make sure that we were providing something that really just didn't exist for everyone, for consumers and professionals alike. And so my background is similar to Ali's, but very heavily focused on the banking side of things and understanding the laws and regulations when it comes to default and even credit management. Both of us have a background in working directly with consumers in the credit repair space, as well as educating both consumers and professionals on credit. So if you haven't attended one of our lives previously, this is something that we do on a weekly basis. So every other week we have a different area of focus. One week our area of focus is very much towards professionals in banking, lending, real estate, really anybody that looks at credit to approve a consumer for something like a mortgage, for example. And then the opposite week is where we're working directly with the public. We want to make sure that all of your credit questions are answered and that we're gearing these lives towards what you want to see. So,
yeah, and that's a good point. So if you have questions, that's where it's great for us to know so that when we are on live, we can answer those questions, that we're helping you where you're at today. But also if we can't fully address the question, we can make that into a webinar at another time.
absolutely. Absolutely. Okay. So bear with me here. I'm going to go ahead and start sharing my screen, and we will go ahead and dive into today's topic. Okay. There we go. All right. So 1.2% of adults have a perfect credit score of 850. I think often we think the grass is greener on the other side and that there's so many people out there that have that perfect credit score, but it is a rarity. And understanding credit can be confusing for many people. And what we really want to do today is make sure we break down the concepts that establish your credit score, but also help you understand how to interpret your credit report so you know what's causing your scores to go up and down. So at the end of today's live, we expect that you'll be able to understand the importance of understanding your own credit report and being able to interpret that credit report, and gain a more solid understanding of how Credit Score Pro can assist you with your credit report and as well as your credit and financial goals. Ali, anything you want to add to that?
No, I think you really wrapped it up. I definitely want to focus and make sure that the outcome is that you understand how Credit Score Pro can assist, because some of the information when we talk about reading your credit report, it's complex. A lot of people tell me things like, oh, the credit report's like foreign language. So we're hoping to make this more alive for you so it doesn't seem like foreign language. But we also understand that there's going to be intricates in there that's going to be hard to understand even after this webinar. So we want you to know that Credit Score Pro is the expert in reading the credit report. So even though we want you to know how to do it, we want you to know that there is assistance there. If you're like, that was over my head, Credit Score Pro is going to handle that for you.
Absolutely. Absolutely. All right, so let's start off with the basics of credit reporting. So Ali, I'll let you go ahead and take it away.
So, the very top of your credit report is going to have your personal identifiers. Personal identifiers are things like your name, your address, your social security number, date of birth, whatever information is being added or shown. It can show, for instance, like where you work. If you've applied for credit, that's where that information comes from. So I like to tell people this because I think I get this question a lot. Your personal identifiers do not, they're not a part of what your credit score is. Okay. So it's information about you, but it's not a part of your credit score. So if you have a job and you're making $20,000 a year and your spouse is making 100, they don't have a better credit score because they work at a different job. So we're all at the same playing field. It has nothing to do with income or job. And I just wanted to point that out because a lot of people ask me about that on that personal identifier section, but that's really just your information. The other thing that might be important on your personal identifier, but another thing that might be important on your personal identifiers is, if it has the wrong address on there or if it has the wrong job, that's information that the credit bureau was provided. It's not necessarily it doesn't always jive with where you're at today. So
Right.
that's where, yeah. So I think that's important. Contents of a credit report, you're going to see at the top, you have your personal identifiers, which I just went over. We're going to go over like the credit account. So what are the trade lines on the credit report of the accounts? Credit inquiries, we're going to talk about what are hard and what are soft and how those affect your score. Public records, and this is an interesting topic we'll get into, but in the public records section, it used to list like if you had judgments or tax liens and bankruptcies. Now it's only going to list your bankruptcies. So we'll talk more about that. And then collections, unpaid debts. So we'll talk more about that.
All right. So the purpose of a credit report, I think this often eludes many people. The purpose of a credit report is really to determine your creditworthiness, to assess your ability or the likelihood that you're going to be able to make timely payments on any debt obligation. It's not meant to look at your income. It's not meant to look at who you are as a person. It's really just meant to rank order your risk for a lender to allow you to borrow from them. So from a consumer perspective, it's really just looking at your credit history. How have you paid your prior debts, your credit cards, your auto loans, your mortgages in the past? And what's the expectation that you're going to be able to make on-time payments in the future? And then we want to also think about the importance in financial health, really just saying your credit report is your report card, or it's your financial health sheet. Essentially, it's saying, what is, are you sick right now? Are you having a hard time? Or do you have a clean bill of health?
I like putting in that perspective, like financial health sheet, right? Because it kind of takes that pressure off of you thinking of like, oh, I messed everything up. But no, where are you at today? And then we know from that, how can we help you?
And like with your health, if your report's a little sick today, you can get better. There's medicine.
There's Credit Score Pro may definitely be that medicine for you.
Okay, so let's take a look at, did I skip a slide there? Oh, no. Okay. So let's take a look at the role of credit bureaus. So credit bureaus are kind of hidden and mysterious, and people don't quite understand who they are, what they do, and how they function. Ali, can you go into a little bit about the credit bureaus and what their role is in credit reporting?
So, you have the three major credit bureaus. You have Experian, Equifax, and TransUnion, and they're really collecting the data so that we have information to report for you. And that's really their job. And they are supposed to make sure that that data that they're reporting on your credit report is accurate and valid and correct, right? So that's their main job. You want to add to that, Ivory, at all?
Yeah, and the other factor I would add into it is they're supposed to make sure that the information's not obsolete, right? Really, that's saying that the information on your report should still be on your report. A better way of putting it is the data too old to still be there? And that can be really important if there are negative items on your credit report, like a collection account, for example. If that should have expired and should no longer be on your credit report, it's certainly something that you want to get taken care of and resolved. The bureaus are also required to comply with laws and regulations like the Fair Credit Reporting Act, which really protects you as a consumer. And it also has protections built in there for the bureaus, creditors, and collection companies as well. And it does give you the right as a consumer to dispute any inaccuracies on your credit report. So let's look at what a credit report is. And so if we look at the overview of your credit score, it's really a numeric representation of that credit worthiness. So the higher your credit score, the less likely you are to default on any debt that you take out. And that credit score itself is essentially determined based on an algorithm created by companies like the Fair Isaac Corporation or FICO. The bureaus utilize that algorithm to generate the score, and then you apply for something like a mortgage, and that mortgage lender is then pulling that credit score to determine if they can allow you to borrow a mortgage, and if so, what is the risk to them? And based on that risk, they're going to determine the appropriate interest rate that makes sense for you.
Right. And, there's only, if you think about it, there's really only 5 things that you need to make sure you're keeping track of on your credit report. And that's payment history. That covers 35% of your score, which is a huge number. So that means paying things on time. Credit utilization is how much credit are you using based on how much you were given. And this really is more factored into your credit card usage. So that has a heavy weight as well. So that's 30% of your credit score is based on how much credit are you using. So when we talk about that, we're talking about, are you maxing out your credit cards? Are you using all of your credit utilization, or are you being responsible and you're using it responsibly? So we'll talk more about that. But length of credit history is 15%. Earlier we talked about there's only 1.2% of the population that have a perfect credit score of 850. And part of that is because of the length of history. So there's a certain level that you can get to with having no negative information on your credit report. Everything is really great. You got all the 5 things knocked out, but you don't have a really long history of credit. And that could prevent you from getting to that 850. So I like to tell people on the length of credit history. So one thing we can't give you if you don't already have it, because it ages you, right? And you don't want that. But if you don't have credit, this is the time to get it. And if you have credit, it's important that you're keeping those credit cards, and I'm keyword credit cards, open forever, because those are the only things that can stay open forever, where loans will eventually close and you lose that history when they close. New credit inquiries are 10% of your score. So this is where you need to be careful about applying for credit. And this is a good point to bring up right now. It is Christmas season. You are going to go shopping and you're going to go to the department stores and they're going to say, I will give you 10% off today if you apply for this credit card. Your answer needs to be no, because you come out of the mall with 10 different credit card applications. You've dropped your score at least 3 points for each of those pools. So if you did 10, that's 30 points gone that day that you went shopping for Christmas. So be very careful about how you are using your credit. And then credit mix is a 10% of your score. And this just means, how do you pay your credit? Do you have different types of ways that you're paying your credit? Like, do you have installment loans? Do you have credit cards? Because those do have different pay structures. And the credit bureaus are looking for, can you pay things on time if it's an installment loan that has the same due date, the same time every month? And in the same amount, and then a credit card that may have a different payment amount and different due dates. So that's important. So those are really the 5 key things you need to really make sure that you are watching when you're looking at your credit.
And so this is a great representation visually. Woo, sorry, that laser pointer is going faster than I expected. This is a great visual representation of what's making up your credit score. And a lot of us are visual learners. So when you see something like a new late payment appear on your credit report and you see the sudden drastic drop in your score, it's because that payment history is 35% of your score. So as Ali said, it is the biggest overall factor impacting your credit health. And you do also want to keep things like credit cards open, as Ali had mentioned, because that's going to continue to ongoingly, making up words here, positively impact your credit, your payment history, right? So you can essentially in some way crowd out some of that negative information by having that ongoing boost from the positive information on your credit report. Now, this is a fun topic most people like to talk about, amounts owed, or another way to put it is that credit utilization. So that's essentially your balance versus your credit limits. That category is actually looking at each card individually as well as your overall usage with all of your cards combined. So a great way to start to positively impact this category, if you are someone who has high balances on your credit cards, is start with your credit card that has the lowest credit limit. Start paying that one off first, because it's a heck of a lot easier to pay off a $500 credit card than it is to pay off a $5,000 credit limit credit card. So
And
that's,
I think
yeah,
it's important
go ahead.
because because the credit bureaus are looking at it individually as well as total. When you do it that way that I just said, where you're working on the easiest one first, you're actually helping impact your credit score faster than if you were to work on the large one first. I think it's very important because you want to look at it as, oh, let's get the easiest one down to 30% or below of the credit limit, and then we're going to move to the next one, and just kind of do that in order of what's easiest, and you'll see a bigger impact in your credit score.
You want to think of it like ratios. A $500 credit card that's maxed out and a $5,000 credit card that's maxed out are both at 100% utilization. So by starting with those smaller cards, you're able to make progress faster, and that overall utilization decreases faster as well, as Ali had mentioned.
Exactly.
So
it'll make you feel good that way too.
Yes,
it'll motivate you to keep going.
Exactly. And mindset's half the battle.
Yes, it is.
And I think we touched really well, Ali, you did on the other points already. So I think we'll go ahead and we'll move on to the next.
I'll bring up one other point, if you don't mind, on that slide, just real quickly. I talked a little bit about credit mix, and we talked about, you want to see that you have credit cards and you want to see that you have your loans. So I've had people ask me in the past, like, okay, Ali, I have credit cards, but I don't have loans. Should I go get a loan? And the answer is like, not necessarily go. Like, I've had people ask me, like, I'll go buy a car today. No, not necessarily. You don't have to have that loan. Credit cards are really pivotal though. However, if you are in a situation that you have the credit cards, but you don't have the loan, we have great resources in the credit building resource page on Credit Score Pro for like little small, I like the self loan, for instance. It's really a savings account that reports to your credit report like a loan. So you're not actually having to go out there and get additional credit. I guess that's what I'm trying to say, or make additional expenses that you don't need. The other thing I'd like to point out is if we have 2 people who have the exact same credit report, but one has a mortgage and one doesn't, note that the one who has a mortgage will have a higher credit score because they have a mortgage. So I thought that it was an interesting take, and a lot of people don't know that. But that same thing, if that person were to go late on that mortgage, they're going to have a bigger hit to their score than if you're the same person, but you went late on a credit card. All right. So I think that's important.
Absolutely. Essentially, the algorithm looks at somebody who has a mortgage as responsible. It's a big venture to be able to get approved for a mortgage and take on that undertaking. Even though mortgage debt is a high amount of debt, it's not going to be looked at the same way as something like a debt consolidation loan, which is very different on your credit report than a mortgage.
Right. Exactly.
So some common misconceptions about credit scores. Now, I don't know about you, Allie, but when I'm on TikTok or Instagram, all sorts of social media, I am berated with conflicting information when it comes to credit. And I think a lot of the users of Credit Score Pro really value the platform because it helps to sift through the noise. Our credit education section of the platform has an entire section dedicated just to understanding the myths behind credit and being able to figure out what's true and what's not, what's false. So I
Yeah,
thought
and
we'd explore a few of those today. Go ahead.
yeah, and that's one thing I really love about Credit Score Pro. There's so much to love about it, but the educational platform to me is so important. It's like you should have it, period. Because like what Ivory said, there's so much noise out there, and Ivory, we both know this. A lot of it is these myths out there that people are using to try to pull you into their service. And it's all just designed really to pull you in so that you buy their service when it's really just fake information or it's wrong. And so, yeah, there's a few of them. I like these. These are great, Ivory. And let me know if you want me to talk on any of these points because I'd be happy to.
So we'll touch high level on a couple of these items simply because as we keep diving deeper into today's live, we're going to explore some of these concepts further. So I'm going to touch on number one, checking your credit score lowers your credit score. We want to be really careful with this. Checking your credit score is not always an inquiry. So inquiries can have an impact on your credit. For example, if you're applying for debt, you're applying for something like an auto loan, a mortgage, a credit card, a student loan. All of these applications are considered a hard inquiry. Now, when you're applying for something like, let's say, new insurance or an apartment, you may see that inquiry on your credit report, but it's a soft inquiry and it's not going to impact your score. Now, beyond that, we also want to consider things like using credit monitoring. So we have a partner here at Credit Score Pro called Smart Credit. And if you utilize the link for Smart Credit to access your credit report, that is considered educational. It is not an inquiry. You're not even going to see it appear on your credit report. And it's healthy to continue to check your credit, monitor your credit. And that also helps you understand what's driving your scores up and down, as well as identify any sort of issues like the potential for identity theft or incorrect reporting. Anything you want to add into that, Allie?
Yeah, I do. So Credit Score Pro is designed to have that credit monitoring embedded in it, right? So that's part of it, the educational piece and the disputes and the plans. But some people think that they're just going to go to Credit Score Pro because they have a credit issue. And I'd like to point this out, just, looking at your credit through Credit Score Pro is not going to negatively impact your credit. And there's so many resources that are provided within Credit Score Pro. I recommend that everyone do it, whether you have a credit issue or not, because it's going to monitor it. And then if you do end up having a credit issue, you can then address that right away. So you're going to get alerted to it, and then you can jump in Credit Score Pro, and they're going to take, Credit Score Pro software is going to take care of it right away. So it's something that everyone should have, especially in this day and age. And with the credit monitoring that we use, the person gets a $1 million insurance policy against identity fraud, which is very prevalent right now. It's happened to me. I lost $3,000. If I had this insurance, I would have kept my $3,000. And it's happening to people all the time. And that's a big part of the phone calls I get. And then other than that, it will do what's called Privacy Master. So it's constantly looking at where your information is being sold on different websites in the dark web, so you can take action to remove it. So Credit Score Pro is not just for damaged credit, it's for everybody.
And so I'll dive into the next myth. Myth number 2, you only have one credit score. I feel like most people are aware that you don't only have one credit score simply by the fact that when you go to get your credit pulled for an auto loan, you find out it's a different score than what you may have seen on whatever monitoring tool you use. Often people who go to apply for a mortgage find out their score is different than what they expected. So there's actually different versions of the credit score algorithm. You've got a FICO score and a Vantage score, and we're not going to dive into the differences of those scores today or those different models. We're going to save that for another live that we'll be doing just on that topic. But just know you do have multiple different credit scores, all with the same goal of measuring your credit worthiness or your overall credit health. Myth number 3, a higher income means a higher credit score. One of the great things about credit is it does not look at your income. It doesn't care where you've come from. It doesn't care who your parents are. It doesn't care what your grades were in school. All that your credit score cares about is your ability to manage debt responsibly. This means no matter who you are and where you're from, you can establish a high credit score and you can leverage that to completely transform your entire financial landscape. And that's a really amazing thing to realize, that you alone can use credit to leverage and change your life. And that's really what Credit Score Pro is here to do for you. We talk about wanting to revolutionize the industry, but we also want you to be able to revolutionize your goals and your dreams for what you can do with your life financially and how you can transform where you're going. So
Yeah, no matter where you're at, that's,
Mhm.
that's the idea behind Credit Score Pros. We meet you where you're at, no matter where that is. So I love that.
Number 4, carrying a balance on credit cards boosts your score. Allie, this is a
I
little
hate
bit of an
this one.
interesting one. So, what are your thoughts on this one? Do you want to elaborate on this one a bit?
So I'm gonna go back that I've been in this business for a long time before I answer this question, because this is one that I hear this myth all the time. Everybody's spreading this myth. No, you do not need to carry balance on your credit card to boost your credit score. Matter of fact, I do not carry balances on most of my credit cards. They have a zero balance. And I know a lot of professionals that I work with that we keep our credit card balances at zero. And we have really great credit scores. So I can tell you that I am one of those 1.2% of the world that has that 850 score. And I don't carry a bunch of balances on my credit cards. It matters about how you use them. Are they active? That's the point that is important. So if you have a credit card and you haven't used it in 3 or 4 months, then you're becoming inactive, and it's not able to report to the credit report that you have activity, that you know how to pay your bills on time. So that's the key, not having to keep a balance. I don't know where that myth came, but I think it came from like credit card companies, because they want you to keep balances on so that they can
They
make
want
money
that
off of you.
interest.
That's what it is, right?
Yeah, exactly.
Mhm.
And myth number 5, this one gets everyone. Closing old accounts improves your score, any accounts really. Oftentimes what we find is we hear from loan officers that have worked with us, and they have clients that come to them. I paid off my auto loan, I closed my credit cards, I did all of these things so I could make sure that my credit was ready for a mortgage. They get their credit pulled and it's tanked. It's way worse than they ever expected. They thought they were helping their score and their scores tanked. And remember, this is because what Allie was talking about earlier. The average age of open accounts on your credit report really helps to drive your scores. Longevity, the credit score algorithm, remember, it's meant to predict your likelihood to be able to pay things on time in the future. And that's going to be based on how you are managing your accounts right now. So having that longevity on your file, your credit file, is really going to propel you and get you to that point of having that perfect 850 like Allie has. So
You have it too, I'm sure, Ivory. walk the talk, right?
Exactly.
Although I am older than Ivory, so I think I told you guys in the beginning that it does take time to get to an 850, right?
I was lucky though, in working in the banking industry and having a parent who was very focused on credit, who did add me as an authorized user on a credit card when I was 16. So that having that longevity before you're even 18 years old is really helpful. So there's a fun side note tip that you can incorporate with
Little
your
tip
children.
if you have kids. Yes.
So okay, so let's look at some real life examples of credit score improvement. These are some simple strategies that you can implement on your end. And now remember, Credit Score Pro is going to tell you exactly what to do. So you do not have to be the expert, but you will end up becoming the expert as you are using Credit Score Pro's AI and Credit Score Pro's education to help you dispute if you have negative information, and also to help you establish better credit habits that are goal-based. So case study number 1, overcoming high credit utilization. We talked about this quite a bit. So there's a couple different strategies you can implement when dealing with high utilization. You can come up with a payment plan to pay down your high interest credit card debt. We discussed this before, focusing on those accounts that have a lower credit limit first. So you're able to tackle things faster and see faster, not just faster, but bigger score boosts during that process. An alternative is some sort of a debt consolidation. If you find yourself stuck in the cycle of not being able to pay down those high interest credit cards, and you need to be forced to have an amortized payment, a payment that has principal and interest built in with a set end date, a debt consolidation loan may be a good option for you, where you can transfer the entire balances from the credit cards to a single loan that's paid off at the end of that 5 or 7 year loan term. Now, remember, don't close the credit cards, but with these options that a lot of our users have incorporated, they've been able to see a big boost in their credit scores. Remember, utilization is 30% of your credit score. Anything you want to add into that from our user experience, Allie?
I do, only because we're using the term debt consolidation, and that can sometimes get confusing to the consumer. Obviously,
Sure.
we have debt consolidation companies out there that are pulling people in to do debt consolidation. And those are where they're trying to, they tell you not to pay your credit cards anymore, effectively closing them. They charge off, then they're going to settle those debts. That is not what we're talking about here. Remember, we want to keep the credit cards open. When we say debt consolidation, we're looking at getting a loan to pay off the credit cards or pay them down to help your utilization ratio and to put it in a payment that you're going to pay off a lot faster. Obviously, right now it's really crazy. We all know interest rates have gone up. I'm used to seeing credit cards at 29%. That's been a while we've seen that with people. But now my clients are telling me that their interest rates on their credit cards are 36.99%. That's almost a 10% increase in interest rates on credit cards, and we're already hurting. So this is going to hurt a lot more people. So it's a really good time to look into debt consolidation loans, because even if they're at the higher interest rate, 17%, 19%, they're still not touching that 36% or 29% that you're currently at. That is a resource that we do have on Credit Score Pro's Credit Build. Part of our website there is a link where you can get information on doing a debt consolidation loan. Mm-hmm. And it is a soft inquiry to check in and find out if you're capable of being eligible for one of the lenders on that platform. So I just thought I'd bring that about, because I think a lot of people think debt consolidation, they're running to a debt consolidation company, and we're not saying that.
Well, I think it's important to understand they're not debt consolidation companies, right? They say they are. They're debt settlement companies.
Right.
It's a specific designation. That's typically how they're licensed with the states that they operate in. But they sell themselves as debt consolidation companies. So be very careful, do proper research if you are looking into something, or you can utilize our resources that we have available and have already vetted for you, so you don't find yourself a victim to doing debt settlement when you meant to get a loan. So. Yeah. Okay. Case study number 2, repairing credit after late payments. So disputing negative accounts and setting up payment reminders. So this is huge. If you have missed payments before, whether it's from hardship or maybe you just didn't even realize you didn't make a payment, when you're in a position now to where affordability has changed, if you were in a hardship, it's important to make sure you're setting up payment reminders, automated payments for at least the minimum balance. So that way you're not forgetting or you're not missing payments again in the future. And then utilizing a platform like Credit Score Pro our AI can automatically scan, read your credit report, identify areas for being able to dispute any of that negative history that's non-compliant with Fair Credit Reporting Act, right? So the AI actually is reading the back-end raw data of the report. And we're going to explore that in more detail a little bit later, but being able to remove negative information from your report can create a really great score boost, along with your new habits of being able to pay on time in the future.
Yeah. And I would say, don't be scared to call the creditor if you are late. Most times, absolutely, if you're like 31, 32, 33 days late, if you call the creditor, number one, they'll remove the late fee if it's not something you've consistently done. And a lot of times, if you're 31, 32, 33 days late, they'll actually remove the late reporting to the credit bureaus, especially if it's not something you've done repeatedly. So if you find that, oh, shoot, I missed that payment, then make it as fast as you can and make that phone call.
And our last case study is building credit from scratch. So if you are trying to reestablish positive credit, or maybe you just don't have a credit score, a great place to start is having a credit card. So if you have some negative credit history, you may need to start with a secured credit card, which is essentially a credit card where you put down a deposit to get access to that line of credit. And being able to have that credit card is going to really help kickstart your credit journey. And this is because a credit card impacts so many factors of what makes your credit score. And we won't harp on that much more. We've already talked about it quite a bit. So I think it's already definitely been explained, but then also utilizing other credit building tools. And as Ali had mentioned, we have those available on our website, or if you are a user of Credit Score Pro, your AI powered credit building plan is going to automatically tell you the best credit building tools for the biggest score boost potential. So it's really tailored to what makes the most sense for your credit report specifically.
Yeah. And I think also, we talk about vetting things. We vetted things that, there's a lot of quote credit building resources out there that charge these crazy fees. My favorite one, my favorite one is First Premier Bank. They charge a huge annual fee. They charge a monthly service fee. So even if you're not using the card, you're always getting billed. And yeah, and so there's a lot of those out there. So with Credit Score Pro's resources, we've really vetted those on what is the ones that are actually good. They're not charging high fees, but that you can then be able to build your credit wisely.
Okay, reading and analyzing your credit report, identifying errors and discrepancies. So identifying errors and discrepancies on your credit report sounds overwhelming, but it's extremely important to be able to identify where these errors exist. About 70% of credit reports, 70 to 80% of credit reports have some sort of an error. So being able to regularly check your report, because again, that data is being updated constantly, gives you a lot of opportunity to make corrections. And here's some of the common types of errors on report: incorrect personal information, accounts that don't belong to you, incorrect account statuses, accounts being reported open when they're closed, accounts being reported past due when you weren't past due, or maybe the wrong month is being reported as a delinquency, and so many other things. Ali, what do you want to add on to this? We'll talk a little bit more in a few slides about how Credit Score Pro can help you with this so it isn't overwhelming, but I do want to make sure we cover anything I've missed.
No, I think you covered all the errors. There's so many errors that could be on a credit report, and the law states that the credit report has to report accurately. And unfortunately, that's just not the case on, I think you could probably look at every trade line that you have or every account that you have. And if you were to look at the actual details on the credit, they're not identical from credit bureau to credit bureau. There's information that's wrong on one or another. So the credit reports are loaded with wrong information. And so it's important to know what you're looking at. And like Ivory said, we'll talk more about how Credit Score Pro can handle this for you. But I think it's good that for you to know, like, what are some things that you can look out for.
Exactly. Let's say you are someone who has a perfect credit score, even let's say high sevens, low eights. A single collection being added to your report can lower your score 100 points. That's huge. And sometimes more. We've had users of the platform who have told us their scores were in the 800s and now they're in the mid to high sixes just from one collection. And they often don't recognize the collection, doesn't make sense. Maybe it's not valid. These are all issues when it comes to credit reporting, and the consequences of report errors is huge and drastic. And this is why we wanted to make sure that we offered something to consumers that allows you to take control of what's going on with your credit and really force those errors to be fixed with the help of the AI.
Yeah. Especially now, interest rates are high, regardless of what your credit score is, but the lower that score is, the more you're paying for everything. So if you're paying more because there's an error on your credit report, that's not okay. And so we need to know how to fix those.
Absolutely. So how are we spotting and addressing errors with Credit Score Pro? So Ali, talk to me a little bit about the features when it comes to error detection that Credit Score Pro is able to implement for its users.
Okay, if I have your question right, what I'm thinking you're gathering is what happens in Credit Score Pro
Yes,
when it
absolutely.
retrieves that credit report. Okay, so when Credit Score Pro retrieves the credit report, it reads it and it analyzes it for any discrepancies, any errors on any of the negative items on your credit report. And upon doing that, it's going to suggest to you what and how to dispute that. So it's going to tell you exactly what to do. All you have to do is click the button, yes, that's what you want to do, which I will recommend that you do. Credit Score Pro is using AI in order to read that information and provide the correct disputes to fix those errors and discrepancies. But one thing that's really important, we're going over some things on how to read a credit report. But what a lot of people don't understand is there's such thing as something that's called a raw data credit report. And I don't want to overuse this, but a raw data credit report really is all the codes and information behind the scenes of your credit report. It's something that we don't see with our eyes because we are seeing what the credit provider decided to let us see that's on the credit report. So we don't always see all the errors that could possibly be on the credit report. Where Credit Score Pro is reading that raw data and it sees all the errors, typically looking for 20 or more errors in each account.
And I know there's thousands of different algorithms on the back end for Credit Score Pro as well. And it's constantly learning, right, Allie?
Constantly learning. That's the beauty of it. So as the industry changes, as the credit bureaus change on how they're taking in disputes or removing disputes, disputed items, I should say, Credit Score Pro is learning the best ways to dispute, basically. So you mentioned in there, I think you said, how does it show the red flags?
So actually what I'm going to do is I'm going to bring up a view of Credit Score Pro so we can take a look at exactly how simple it is, as Allie had mentioned.
Like that. My background got real dark so you guys can see like parts of my head and parts are gone.
Yeah, I saw that.
Yes.
You were disappearing.
A little bit shapy here.
Okay, so I'm going to go ahead and I'm going to bring up Credit Score Pro. I'm going to show you how simple it is. So Allie had talked about how it's automatically going to determine the credit disputes for you. So what I have done is we're starting here with the dashboard. I can simply go to dispute letters and I can see my prior disputes. I can also go to the credit items on my credit report and I can see what's positive, what's negative, what has had different rounds for disputes sent on it. So I'm going to create a TransUnion dispute. And what's really great about Credit Score Pro is I can go ahead and select each account that I want to dispute. And I'm going to choose just a couple of accounts just for the sake of speed and of time. And so now that I've selected these 3 items, I'm going to go ahead and click next. And then I'm going to click add dispute reason. And what's really great about Credit Score Pro is it's automatically coming up with the best dispute reason. And then all I have to do is click save. And really, Allie, you had mentioned previously in another one of our lives, when's the only instance you would suggest changing the dispute reason from the suggested?
Really, my only reason would be if you are truly a victim of identity theft, is because Credit Score Pro will not know if you are unless you tell it. And so that's where that would be the only reason when I would change it.
So you see how simple and quick that was. I have now created the disputes. All I have to do is click finish. I have now disputed the negative information on my credit report. It's that simple. And from here, all you have to do is now send out those disputes.
Yeah. And you will get emailed those dispute letters. So it makes it very easy.
Okay, I'm going to go back in. Ellie, your face is disappearing.
I know.
Your floating head with no hair.
Trying to figure out like how to sit to make it better, but it's my setting is getting dark as the day has gone.
Okay, I'm going to try and share.
I'm going to try to adjust that. So I'm going to go off the screen for just a second while you're getting to your next slide.
No problem. Okay. Oh, okay, guys. I should have just clicked the other button. All right. So we wanted to talk a little bit more about the credit score ranges as well. While Allie gets herself situated, I'll jump into it. So we've talked about how you can start in different places, no matter where you're at in your credit journey. Credit Score Pro can help. This is just an illustration of the different score ranges. So somebody who's in this lower end of under a 520 is likely going to have a difficult time being approved for any sort of lending opportunity unless it's based on reestablishing positive credit, unless it's really focused on rebuilding rather than something like, I don't know, a mortgage, for example. As you start to progress and get into this 620, between the 620 to 680 range, a lot more opportunities open up for you and are available. You're still going to have higher interest rates, but you at least at this point have the ability to qualify for more lending products. And then once you start to surpass that 700 range, that's when your world opens up and there's much more possibilities for you. And as you keep improving and keep getting higher to the high sevens and the eights, that's going to be when you can qualify typically for any sort of lending opportunity, at least based on credit specifically. But also you're going to have the best terms available to you, and they really roll out the red carpet.
Yeah, I say that 760 and higher range is the yes, sir. Meaning like you could go in anywhere for lending and they're going to say yes to you. And it's a really great feeling. So that should be the primary goal. At least a 760 is what you're shooting for.
Absolutely. So Allie, tell me how Credit Score Pro helps our users.
So, well, it's a complete platform, right? So let's go there. That's important to know. You're going in that platform. You have your credit monitoring, which obviously provides you with, like I said before, you have Privacy Master for removing your information from being sold to different websites in the dark web. You have your $1 million insurance policy against fraud protection, you have your alerts, you have the ability to do AI disputes, you have your educational platform, and you have your tailored action plans specific to your goals. So it really, like I said before, you don't have to have credit issues to be in Credit Score Pro. You just need to be in it regardless, because it's going to give you so much value on top. But if you have credit score issues, obviously it's a great resource for that as well.
So, why are we here? I know throughout time, we can't live just on cash. You may have met people who talk about cash is king, but what happens when you need to leverage and you need to move up in life? You can only get so far with cash. So if you're hearing those around you telling you, don't worry about your credit score, it doesn't matter, just use cash, that's not realistic. It just really isn't. I don't know who out there, as far as the average person, has, $500,000 or more sitting out there to buy a house, right? And if you're going to continue to rent, your rent prices are just going through the roof year after year after year. So having a strong credit score, it gives you a leg up, and it also allows you to transform your entire future, allows you to create generational wealth. And really the start of building wealth is often buying a home.
Yeah, I agree. And, I think, yeah, we always said cash is king, but I've heard so many professionals now say, you know what, credit is king. Because like you said, you have to have credit to really survive, regardless if you have a boatload of cash to do all those things. Most people, even if they have a lot of cash, want to have a credit card, right? Well, you can't have a credit card if you don't have good credit, right? So you have to be somewhere. So I feel like credit is such an important piece in our world right now. It's important that you understand it, that you use it responsibly. And I really mean the word use it, because a lot of people think that they can get credit and then hide it away, and it's, get credit cards and hide it away and it's going to help their credit. It's not. We talked about that activity, right? So using it responsibly and keeping it open and active, it's so important right now.
Absolutely. Absolutely. Allie, talk with me a little bit about the analysis and the building side of Credit Score Pro.
Are we talking about the action plans?
Absolutely.
Yay. Okay. So one of the features, I love all the features, but I really like the action plan because, I think about it this way. Here's a good example that I like to give people. So let's say you want to get out, you want to get in good shape or you want to lose weight and you have this goal, but you have no idea how to get there. So you're looking up resources and trying to figure it out, or you're going to a personal trainer. So I like to say that Credit Score Pro is that. If you are looking to improve your credit, it's your source. It's going to give you all the resources you need. But better yet, you get to go in there and you get to decide what your credit goal is. Do you want to just have great credit? Is that your focus? Is your focus to get out of debt? Is your focus to buy a house? You select your goal and it's going to create a detailed, tailored plan specifically for you. So I like to stress that because you can't print off your plan, give it to your friend and say, hey, here's how you do your credit. It's not, to get to this goal. It's specifically
Absolutely.
tailored to you. It's going to analyze your credit report and decide what needs to be done based on your goal. So I love that because a lot of people have a goal, but they don't know how to get there. And this takes that heavy weight off your shoulders of trying to figure out how to get there because you just have the steps and it's like a checklist, right? I believe that if people have a goal and they have their steps, they will reach their goal because they'll take one step at a time, right? But a lot of people
Absolutely.
have a goal but don't have the steps and don't know how to get the steps, and that's where they have a big block.
Absolutely. It makes you the expert without you having to spend, the last 15, 20 years that Allie and I have learning
Exactly.
everything.
Learning what to do. Exactly. Yeah.
And to
All in the
expand,
palm of your hand, right?
exactly. And to expand on that even further, along with that, we did want to make sure you do have the coaching and the education that you need. So, from your dashboard, if you go to the tutorials tab and you click coaching, you have a full credit education course available at your fingertips. It's broken down into bite-sized videos and all sorts of different sections and comes with additional resources that you can access here on the resources tab as well. So there's really no topic credit related that we do not cover. And we'll continue to add and refine this as there's changes within credit scoring in the industry as a whole. But just know you have these resources here available for you. And not only the credit education side of things within our platform, but these lives that we're doing. And we also have the community, right? We have a community group on Facebook where you can ask your credit questions. You can celebrate your wins. You can get support from others that are on the credit journey just like you are. So it's really meant to be a platform that helps you to excel and succeed, and the sky's the limit.
And let's bring this up with that community page. You're going to get factual information about what you need to do with your credit or questions. You're going to get factual answers. You're not going to get fluff, right? We are not here to try to sell you anything at all. We're here to help you and educate you. So our information that we're going to provide to you is factual and not that stuff that you might see on social media. Can you do one other thing, Ivor, really fast? If you can go back to the Credit Score Pro platform
Absolutely.
and show the tutorial section again, not the coaching videos, but the tutorial itself real fast. Okay.
Tutorials.
Yeah. So I really want people to know where this is because I don't want you to get into Credit Score Pro and you go, okay, well, I haven't seen a lot of the lives. I didn't see what's going on. These videos are designed to help walk you through how to do those disputes through Credit Score Pro. Okay. So each video is very short video. They're easy to watch and it's going to tell you exactly what to do. So I don't want you to ever feel lost inside of Credit Score Pro. Please note that that's there to help guide you. Okay.
Bear with me, switching back.
Sorry.
You
I
are
didn't want
good.
to interrupt you when you were on that page.
Oh, you're fine. Oh, going too fast. Okay, building and maintaining good credit, best practices and credit health. So we've talked a little bit about this. We all know the obvious: pay things on time, keep credit utilization low. If you can, ideally, as we'd mentioned, we'd like you to pay your credit cards off monthly. Avoid opening too many new accounts. We have seen sometimes where people get carried away and they're like, okay, I want to build credit. I'm going to open every single account I can find. No, that's not helpful. Just follow the plan that's provided to you. Follow that action plan in Credit Score Pro. And then regularly checking your credit report for accuracy. Now, you're going to automatically be prompted by Credit Score Pro. It's going to automatically import your credit report and remind you, hey, it's time to do a check. And then AI is going to read your report. We make it as easy as possible for you. And then long-term credit management. We've talked about what that looks like. And each time you do a new analysis of your credit report, and you change your credit goals as you've reached one goal and you're moving on to your next goal, that action plan is going to be updated for you. So you can have that management that gets you to that 850 credit score.
Yeah. And keep in mind too, even if your goal doesn't change each month, things could change on your credit. So or you may have completed some of the action steps from the last time. So you can still run a new report to see what have I done, what have I completed, and what should I be focusing on this month. So it helps you, so that it kind of wipes off the things that you did do. So you have an exact focus on what you need to do.
Sure, absolutely. So we talked about a lot of this already. It's personalized to you, it's not this cookie cutter plan that's the same for everyone, right? Does the regular checkups and has those reminders for you. So I don't know if there's anything else you'd like to add on here that we haven't already mentioned, Allie.
No, I think you talked about the automated reminders, and I think that's important.
So, and we've talked about the tools available in Credit Score Pro. So just remember, it's a full suite of literally everything. There is nothing available on the market today that has as much depth and breadth when talking about credit and helping you with your credit.
Yeah.
So, and I think one of the other things we haven't mentioned is how user friendly it is. I showed you how simple it is to do a dispute. And I mean, it doesn't get any better than that.
It's so easy. I don't think you can get easier. I don't know how you could.
So
Yeah.
So with that being said, that concludes our topics for today. Now, as a reminder, we are going live every single week. So 1 week on for professionals, the following week for users of Credit Score Pro or the general public. Feel free to attend both. All of them are going to be very helpful. So at the end of each live, we welcome the opportunity for you to go ahead and just put in the chat what topics you're interested in, and we'll make sure we do a live about it in the future. But stay tuned for next week's live. We will be here at the same time every Thursday at 2 p.m. Pacific, which is 5 p.m. 2, 3, 4, 5. Yep, 5 p.m. Eastern. So
Yeah.
we hope to see you there.
Yeah, please make sure you follow and like us so you're getting the updates as well. And definitely comment. Let us know if there's anything any questions that we can provide, like Ivory said, and we'll make a live for that as well. And don't forget, go to creditscorepro.ai and get started today. Can you show them our website real fast?
Oh yeah.
They know how to get there. Creditscorepro.ai. I remember that. There you go.
Creditscorepro.ai.
Right,
and remember, our AI is free. The only thing you do is paying to access your credit report. And if you want to join our community online on Facebook, we would love to have you. We have obviously our page for Credit Score Pro, or a business page for Credit Score Pro, but then we also have a group you can join, like I said, where you can cheer each other on, ask any questions about credit. It's called Credit Score Pro AI Credit Revolution. So we hope to see you there.
Great. Thank you guys. Have a great evening.
Bye.